I'm Reuters columnist James Saft. I can't tell you if it's going to turn out to be good policy. I can't tell you if it's going to turn out to be the salvation of the euro. But the ECB's decision today to stand as effective lender of last resort is a pretty good reason for investors to take on more risk. The ECB on Thursday announced a new program which essentially means it'll buy unlimited amount of Eurozone bonds. That'll allow it to regain control over monetary policy in the Eurozone periphery and to serve as an effective circuit breaker against sovereign financing panics. This comes with big conditions for states that want the money. They, in essence, Spain, Italy, whoever it may turn out to be, will need to sign on for strong reforms and a considerable amount of austerity. That said, once it happens, they're going to have a deep-pocketed central bank which has said, we'll spend as much money as need be in order to keep interest rates at a reasonable level. That's good news for risk assets. It takes off the table a catastrophic outcome, at least in the near term for the Eurozone. So for that reason, you've got to be more comfortable holding a risky asset today than you were last week, much less a month ago. What could happen here is that essentially the ECB is locked in kind of a death pact with the states that take financing from it. If a state decides after a while that it can't stick with the reforms and backs out, the ECB is going to have a very difficult situation. Does it pull the plug, in essence, on the Eurozone? Does it make the bonds it holds on its own balance sheet worthless? That's going to be tough for it. And that means that in some ways, the worries of the Bundesbank of inflation and currency debasement could turn out to be true. For now, as an investor, all you can say is you're more comfortable, but you're more comfortable only for the near term, and you can't count on anything over 3 or 6 months.